Just to be perfectly transparent, Pinduoduo really caught me by surprise. Their latest quarterly results blew all expectations out of the water. I'm not going to sugarcoat this or even attempt to sugarcoat. I think Alibaba is in a really tight spot on all fronts. JD.com top tier, Pinduoduo bottom tier, ByteDance every tier. That said, I'll still lay out my case on why I remain apprehensive on investing in Pinduoduo specifically. So just a disclaimer, I do have Pinduoduo exposure via KWEB. So it's currently at 5th place, around 6.33% of KWEB's allocation. But I'm just particularly bullish on Alibaba and also Tencent, which explains my individual position exposure. So I think the only more pertinent exposure that I need from you is the like button. So it exposes both of us to a great deal of blessing. So don't forget to bless us all. Now, I will attempt to lay the context for Pinduoduo for those of you who haven't really been following the company and don't really know what they do. So on a year-to-date basis, Pinduoduo has significantly outperformed any major indexes with a 54% return. Yup, you heard it right. So much for China being uninvestable. There are still many other Chinese stocks out there that were on their way to the moon, while the US market was essentially collapsing on itself. Anyhow, if you were to pull out the timeline of how Pinduoduo has performed in 2021, you can see that it painted a whole different story. At its peak, in February of 2021, it was trading over $200. Want to know how low did Pinduoduo go this year? 90%. Yes, you have heard it right. From peak to trough, Pinduoduo was down 90% to $20 in March this year. So some of you might be wondering, what exactly is going on with this stock? Maybe because Pinduoduo was blessed with the Cathy Woods effect. Jokes aside, to give you guys a quick crash course, Pinduoduo did not really have a very long history. They were founded in September of 2015 and their user base went from 0 to 100 million in the first year and then to 200 million in the second year. Until just last year, which is around 6 years in the making, they last recorded 868 million last 12-month active buyers and around 733 million average monthly active users. So for investors that are not very in tune with the Chinese e-commerce space, they might still think that Pinduoduo is just some young startup trying to take over the e-commerce industry. I think it's pretty safe to say, at least for now, that Pinduoduo has already proven itself and can be considered successful in their very own right. Clearly, their business model is working exceptionally well, especially in the extremely cutthroat environment and industry. So one thing I would like to point out though is that Pinduoduo actually only turned profitable in Q2 of last year. So that's around 6 quarters ago. So by profitable, I mean having an operating profit, but it's still non-GAAP, which excludes things like share-based compensation. But I'll try to cut them some slack here because hey, they did turn into a profitable business per se. So if you were to think about it, at its peak valuation, which is Feb of 2021, Pinduoduo was not even non-GAAP profitable. So for those of you who don't know or don't understand what GAAP is, it stands for Generally Accepted Accounting Principles. So in an accountant's eye, those are not even real earnings. Those are just make-believe earnings. So at $200 a share, Pinduoduo was valued at around $250 billion USD market cap. Sure, we can argue until the cows come home on how valuable Pinduoduo's current customer base is or how effective their new business model was. But clearly, in retrospect, there was some sort of euphemism going on here, which was my first impression of the stock anyway when I first looked into Pinduoduo and trying to understand the competitors in the Chinese e-commerce space. So it's the classic, I'm willing to pay for growth at any cost. But back then, Pinduoduo had monstrous growth, by the way. 50 to 100% year on year easily. Easily. And I guess that can be a great growth story to all the said investors. Long story short, Pinduoduo positioned itself with a very unique proposition by adopting the C2M business model, which means consumer to manufacturer, where they encourage group buying. And since China is essentially the manufacturing hub of the world, they are able to offer dirt cheap prices straight from the manufacturer to the consumer's hands, essentially cutting out all the middlemen from logistics to retailer to God knows what is in between. So Pinduoduo leveraged on both group buying and social buying, which catapulted their user growth and essentially user attention. That said, they were still deeply in the red then, but not to the point of bankruptcy. So they continued putting their heads down, continued executing, continued growing both top and bottom line, and doubled down on their value proposition of being the app for being value for money. So I think that brand recognition was instrumental in achieving the success that they did in this year particularly. So in 2022, I'll be providing just some figures, just so you have a greater context for your own comparison. In Q1, Alibaba's core commerce was negative 2% year on year. JD was plus 18% and Pinduoduo was plus 7%. Okay, it seems that JD is taking the lead. So in Q2, Alibaba's core commerce was flat, JD was plus 5.4%, and Pinduoduo was actually up 36% year on year. So of course, one quarter don't mean anything. You need it to be sustained in order to even draw a meaningful enough conclusion. And in Q3, which is just this last quarter, Alibaba's core commerce was up 3.8%, JD was up 11.4%, while Pinduoduo was up 5%. I guess 2 quarters of significant outperformance do signal some sort of underlying forces at play here. So in retrospect, it does seem like the weakness of the Chinese economy is slowly getting more and more pronounced by the day, as consumers, or essentially the Chinese belts, are being tightened and they immediately switch to the lower cost option. Now, some of you might be wondering, why is Alibaba faring so badly against the two competitors? I thought Alibaba's Taobao is also relatively cheap. I think the answer is yes and no. So Taobao is indeed cheap, and in fact, Taobao also offers the same C2M models to their customers. But it does seem like there is a certain affinity between customers and Pinduoduo's app. And sometimes, the offers on Pinduoduo is just mind-boggling. I remember someone showing me that it was less than $1 to get an electronic toothbrush on Pinduoduo. It was 80 cents or something. My mind was blown. Furthermore, Alibaba also has a much bigger revenue base, which don't allow them to grow at like 50 to 100% clips. In fact, I'm sure Alibaba has a market share bigger than JD and Pinduoduo combined. So we are not comparing on equal footing here. Of course, I'm not saying that Alibaba is unbeatable, and clearly, at least in the last 3 quarters, Alibaba's performance has been pretty lackluster. But I just wanted to point out the broader differences and nuance between the 3 companies. So on top of that, for those of you who have been following Dalio, which is the famous macro hedge fund guy, it does seem like he was betting for this weak China situation to play out. So in the last quarter, he actually added to his Pinduoduo position while disposing his JD and Alibaba position in totality. And I think I'll have to give it to him for making such astute predictions, and clearly, Pinduoduo has significantly outperformed both JD and Alibaba on a year-to-date basis. So personally, I tend to prefer companies with a longer track record, which was why I even picked Alibaba in the first place. And when I first began my position, Pinduoduo was still loss-making, and I tend to stay away from money-losing companies in totality. That said, I think Pinduoduo is onto something interesting here and has managed to punch above its weight for a few quarters now. So all things considered, assuming that China recovers sharply from here, I still am skeptical on how Pinduoduo is able to continue to scale and sustain its position from the lower echelons of the value chain in the e-commerce industry. So for now, they have been executing spectacularly well, and I'll give the management team 2 thumbs up, like you should, giving me thumbs up buttons as well. But I remain apprehensive on starting a sizable position in Pinduoduo, and of course at today's valuation, I'm even more scared. So with that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!